For insight on the latest round of violence and its impact on the local economies here, Chen Herzog, chief economist at BDO Consulting, joins us on set. Thank you very much for being with us.
Hi.
Well, how severe is this flare-up now having an impact on the businesses here, both Palestinian and Israeli?
Well, it really depends on the length and duration of the crisis. If the crisis will be able to be sustained in a relatively short time, a few weeks, less than a month, then I think the Israeli economy will be able to recover. However, if we are going to an ongoing crisis, like we had in the first intifada, the second intifada, then we're headed to a severe effect on the economy.
All right. Well, the tourism ministry recently released a statement minimizing the impact of this latest crisis that we've seen this week. How much of that is a PR stunt?
Well, I think it is true in the short term. In the short term, the tourism industry hasn't yet been impacted, but is starting to impact. And as the crisis continues and gets longer and longer, tourism levels will diminish. You have to remember that the tourism industry is just now beginning to recover from the crisis of the Tzuk war. We are hardly back to the level. We were hardly back to the levels of incoming tourists that we had before the Tzuk crisis, and I don't think we will be able to sustain another long crisis.
And that's from the protective edge war that we saw in the 2014 summer. Moving on here, though, you talk about duration. What about the short and long-term impacts on both the Israeli and Palestinian economies?
Yes. If we're talking about the Palestinian economy, of course, the impact is devastating because they are not able, the closure, the lack of employment, as we saw in the preceding documentary, the dependency of the Palestinian economy on the Israeli economy is tremendous. In terms of the Israeli economy, first we have the tourism industry, which is always the first to respond and the last to recover. And beyond that, we may see an effect on the investment level in the industry because companies are just now finalizing their budgets for the next year, for 2016, and in such environment, of course, investment level will diminish. And you have to remember the problem that the Israeli economy faces. We're coming into this crisis in a situation that the economy was fragile anyhow.
Right.
We don't have the cushions, that levels that we have in the second intifada that was in September 2000. We came from a high level of growth rate, the 2000-year boom, and we were able to sustain the crisis. Now we're coming to the situation that the economy was fragile in the first place, and we fear that the growth rate in 2016 in terms of growth per capita will be negative.
All right. So how resilient do you think that the economy can be under the situation that it was already soft to begin with?
That's right. That's our main problem. The starting point means that the economy is not very resilient to such crisis.
Right.
And
shocks to the economy. Well, let's speak a bit about stocks. What about the stock market here, the Tel Aviv Stock Exchange? Is it susceptible as well?
Well, you would be surprised to see that in relative terms, the Israeli Stock Exchange withheld this crisis in pretty strong way. And we always see it in the Israeli stock market. The political factor is not a critical factor that affects the stock market. It is used to those political turnarounds. The issue here is economic. If the stock exchange will see that the crisis is translated to economic slowdown, then we will see companies beginning to fear that of slowdown in sales, incomes, revenues, and we will see the stock market respond.
All right. Well, thank you very much for bringing this insight to us, Chen Herzog of BDO.